Hello, value investors. Thank you for joining me. Today I want to talk about Adobe. So Adobe reported Q3 results yesterday night, and there's a lot of different puts and pulls, so I wanted to address that. We're going to talk about Adobe's different segments. We're going to talk about its guidance and how that looks up. We're going to touch about its valuation and offer a comparison with some of the other companies. And if you're new to the channel, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you which stocks I own and why, with balanced arguments for the stocks I own. You're welcome to do a totally free trial, so hopefully you can find a stock that suits you. So, let's get started. As a brief reminder, Adobe has two main segments. It has digital media and digital experiences. By far, digital media is much bigger. It has that family of products such as Adobe Acrobat and Photoshop. Digital experiences is a kind of a newer opportunity. It included the acquisition of Marketo and Magento, that the company deployed approximately $5 billion a couple of years ago to grow this segment, and that helped to diversify away from its digital media segment. Moving on, CEO Chantu Narayam talks about the fact that all kinds of students and professionals and media influencers are coming to Adobe to help them tell their story and to amplify their vision. So Adobe's being positioned or has a narrative around it being a new era stock. So it's the idea that companies that are looking to digitally transform themselves would look at some point towards Adobe's product. This is not the same as saying that Adobe is a clear beneficiary of the work from home environment. Adobe has already been ticking along at quite a strong pace for quite a few number of years. So investors that were hoping for it to be a Zoom-like performance after hours would have been sadly frustrated. But there's a lot here that we should continue to talk about. One thing is about its growth rate. So Adobe historically lowballs its estimates like all public companies, and it's estimating that the guidance for Q4 should come up at 12% year over year. Even if we assume that its revenue growth rates come out 1% or even as high as 2% higher in Q4, this is still a substantial decline from the 20% growth rates we were seeing in the same period a year ago. So it's a case that Adobe may be just coming under its own weight, and I believe that investors should not be overly concerned right now because Adobe is a household name, and that's what they're paying for. They're paying for strong visibility, mid-teen growth, and on that front, I think that there's a lot to be excited about. So here's a thing I wanted to just briefly mention. Analysts are kind of expecting Adobe to come in with low teens. So if Adobe is able to kind of tick above that and come up at about 13% or so year-over-year growth rates, it would still help it beat estimates. And anytime that the company's being able to outperform lower expectation, that's really a compelling investment to own. I think that there's a lot here to be excited about. I read through many people's comments, and I don't think that Adobe is overvalued. I think that if I gave a brief comparison here with ServiceNow. So ServiceNow is obviously not a direct peer to Adobe, but it's another company that is can be for many people a household name, and it's ticking along in the digital transformation era. And it's non-GAAP, so this is when the stock-based compensation is added back, its non-GAAP operating earnings come up at 28%. Compare that with Adobe's. Adobe's non-GAAP operating profit margins of 43% is a huge improvement. ServiceNow trades at 20 times forward sales, whereas Adobe is only trading at 16 times forward sales. I just wanted to mention that Adobe's fiscal year finishes in the next 70 days or so. So when I talk about its fiscal year forward revenues, I'm talking about fiscal 21. So that's next year's. So there's some slight misalignment with ServiceNow, but it still drives the overall picture that Adobe is just the going price for companies right now, that many companies are looking at approximately 20 times forward sales for a SaaS business, and Adobe certainly has what Adobe lacks in terms of revenue growth rates. Adobe more than makes up in bottom line operating profits. So I think there's a lot to be excited about Adobe, and it just takes long. You don't want a lot of positive surprises. You just kind of want to be ticking along, and you should bear in mind that Adobe's this year so far has done 50% performance on the stock, which vastly outperforms the S&P 500 over the same period. That's only done 5%. So it can be low surprises, but it really returns strong gains. As always, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, and you're welcome to do a totally free trial. See you next time. Bye.